Hey everybody, welcome back to another daily recap. We'll be going over Friday, August 9th trading session. Let's get right into it on the daily chart. As you can see here, this is Friday's candle. We saw a decent bullish move. As you recall, I was hoping to see further downside, but looks like we did head back up. We retested the support and resistance zone right here, this blue zone. And we also tested the bottom of this wedge that we formed. So hopefully, now that we've gone back up, rallied, we touched the 10-day as well. If you remember what I was saying when we were looking at the E-mini S&P, price tends to like to rubber band off the 10-day moving average. So we did see that here on crude oil as well. We tapped it. We tapped the support and resistance zone. Hopefully that, with that happening, we can see that further downside now. Or we may break back into this wedge, which I wouldn't like to see just because it's most likely going to lead to consolidation. So hopefully now that we've tapped both of these things, or three of these things, I should say, including the trend line for this wedge, maybe now we can see some downside. As when we break down into the intraday chart, we did actually take a trade on Friday, which I will show you, and we did take a trade in the mini S&P as well. So let's look at that daily chart now. Oh, also, before I go over that, there's another thing I want to talk about. The reason why I'm looking for further downside as well is because we essentially have a triple bottom here. As you can see, this low on June 5th, as well as the low on June 12th, and then again, the low on August 7th. We did tap it here on August 7th. Remember, we were targeting this, and we did tap it, but we didn't really see that much range below it. Once we hit it, we immediately rallied off, which, in turn can be a bullish sign, but the markets don't really like to see triple bottoms like this. Price tends to like to break these structures, and so that's mainly why I am looking to go down. It's way too neat down here. There's a lot of stops resting below this, even this 50 level. Maybe we can see this 50 level touched. But right now, a triple bottom doesn't really look, it's just too clean. I want to see price break it. Whereas on this upside, we have all these moving averages consolidated, which again, I haven't seen in a very long time, or I don't think ever in my 5 years of trading. So it's a sloppy mess up here. There's a lot of resistance. Hopefully, now that we've come back up, retested this, we can finally see a breakdown below, take all of these stops out. Who knows? Once we break it down to the intraday chart, I'll go over some game plans that we can see to hopefully reach that target. But for now, we gotta have to just see what the market's telling us it wants to do, and then we'll follow it, and hopefully it takes out these lows. But okay, all right, let's go into the mini S&P now, daily chart. So what did we see here? If you recall what we saw on Thursday, we filled in that gap, okay? Now, where are we at? We're kind of just in the support and resistance flip zone. We tested it on Friday. We went down. We'll see that when we break it down into the intraday chart. We're at this 10-day moving average, and we're also near this 50, okay? So not much else to say on the daily chart. Again, we saw a very strong rejection off this 200. We'll see if we can break above this 10-day, head higher, maybe all-time highs again. We'll see. On the intraday chart, we can get a little more into detail and a game plan to look into for next week. But like I said, I took a trade in this as well on Friday. But let's go into the intraday chart for crude oil first. All right, so this is Friday's day trading session, as you can see here from 9 to 2:25. So as you can see, this is the trade that I took right here. I took it immediately after the 5-minute open. I'll talk you through why I took that trade. So zooming out a little bit, we were heading higher. Of course, we were, like I said before, we were aiming for those lows to be taken out. But I'll tell you why I took this long trade here. Overnight, we saw some consolidation, and then we started heading higher towards open, okay? We started, relative to all of these daily profiles, as you can see here, we're inching higher, and we also broke. Oh, let's draw in this daily profile. All right, I don't know why that wasn't drawn in already. There it is. Okay. So we opened well above Thursday's. This is Thursday's trading session. We opened well above Thursday's volume profile high, way above it, as you can see here. So as I always like to do, When we see a big gap up in price, I like to look at the overnight session, okay? What did we see here? This is the overnight session's value area high. Right at open, we immediately went down, tested it, had a strong bullish candle up, okay? We rejected strongly off this. So what did I do? I took a long trade immediately after it. I had my stop at about 30 ticks. Remember what I said, I believe I said this last week maybe, but 30 ticks is kind of the maximum for what I want to take. So even though normally I do like having my stops underneath that, momentum candle, at that level it might have been a little bit too much for me. So I was willing to take that 30 tick stop, which was my max, and I aimed for this level right here. What is this level? Zoom out a bit. And you can see this level is Tuesday's value area low. I believe I talked about this Thursday night. I said if we do go higher, we're most likely going to see this value area low tested. It hasn't been tested before. We also have a naked POC here, meaning we haven't tested that POC either. So once we broke up higher, once I saw that we had some bullish momentum, okay, remember, we were heading higher overnight. We closed well above Thursday's value area high. It was looking bullish. There were bullish signs everywhere. So what I was targeting was this naked POC as well as this value area low here, okay? So let's break that down. We saw about a 2.67 risk reward ratio. 30 tick stop for an 80 tick profit. But remember, I'm risking 2% per trade, so I made 4% on this trade. So what did we see after we hit it? Not too much. So remember, this is the value area low for Tuesday. Kind of just consolidate around it. You broke down, broke back up, went sideways trading action into the close, which, if you remember what I said on Thursday, it's to be expected. It's Friday. We may not see a lot of range. The only range that we saw was right at open. So this really was the only trading opportunity. I wasn't really interested in anything else going on. Friday trading action going into the weekend. Once I saw this trade, this range, I kind of expected it to just kind of consolidate for the rest of the day, which is what we saw. And remember, this is a very volatile market time. This entire range was, hey, let me draw it out, was almost 2 full points, okay? That's ridiculous. It's very, very large. Remember, 30 ticks is the max I want to be risking. So once I saw this range pan out, I was expecting just sideways action. So where does that leave us going into next week? So let's go out into a different chart actually. So this is the same chart. It's crude oil, zoomed out on the 1 hour. Or actually, let's go on the daily as well. So this blue box right here is something I don't really want to be around. This is a big support and resistance level. As you can see here on Friday, we tapped it, rejected down a little bit. If you remember, even on that daily chart, let's bring that back up again. So this is that same blue box. Again, now that we tapped it, I want to see further downside. So let's go down into the 1 hour. Let's talk about lines in the sand for this pair. This level right here, the 53.70 level, if we break down below it, we could start seeing some further downside, okay? And then conversely, if we see a break of either the high of this box here or around the 55.70, 55.60 level, if we break up above that and can hold, then we'll see some further upside. Again, I want to see further downside just so we can take out that triple bottom that I showed you on the daily time frame. But again, we have to just do what the market's telling us. Don't fight the trend, okay? So hopefully we'll see where we open up on Sunday and then going into Monday's open. If we are below here, hopefully we can hold this level and we'll head lower. If not, if we're right around the zone, sit on your hands for a little bit. Let's see where the market wants to head. There's no reason to hop into a trade every single day. If we are on this level, it's not really appealing to me. I mean, even if you look back over here, just a lot of sideways action. Excuse me. Small ranges, very small ranges, and just sideways movement. I don't want to be sitting in that chop. So again, if we do open up around this level here, just sit on your hands, wait for the market to tell us what it wants to do. All right, so that's our plan for crude oil. Now let's go into the intraday chart for the E-mini S&P. Again, I took a trade in here as well. And all right, so a couple things that I want to point out here. One, the trade, which we will get to in a second. and also an opportunity that I missed. Honestly, to be honest with you guys, I got kind of lucky over here. I wasn't sitting at the charts, so I did miss this movement here. I'll tell you why I got lucky in a second. But first, let's talk about where we opened. So we opened here in value for Thursday's volume profile, as you can see here. Right around or we opened below Thursday's POC, but we're in value. See value area high here, and value area low here. Open in value, started going higher, and this red line that you see here, the 2934 level, that is the close of the gap. So let's go to that SPX chart that we were looking at. Let's go on to the 5-minute. This level here, remember, the gap fill that we were targeting, this red line is the same as this red line here, just transferred over to the futures contract. It's Sunday's close. So we went up, we tested the high of that again, and we also saw a little bit of a gap here overnight. So we tapped that and we started heading lower, okay? Now I'm not very interested in taking shorts at this level, or honestly, if you remember what I said, I was kind of neutral on this pair, just because we are kind of in no man's land here in the middle of this gap. So unless we break down below it for bearish momentum, or we can show that we want to hold above it, I was essentially neutral on it, okay? So as we started heading lower, we broke Thursday's value area low here. Once we broke down below it, we consolidated for a bit, we broke up, okay? Now, again, I said I wasn't in front of the screen at this time, but I may have been tempted to take a long trade here on this retest of this level. I probably would have had a buy set right here. But as you can see, we broke down below it and started heading even lower. So this potentially could have been a loss. Like I said, I might have gotten lucky here. Who knows? But let's talk about what happened after that. So after the fact, we started heading lower. And again, we're in no man's land between the gap, okay? And there's not much we can base a trade-off at these levels in terms of volume profile. As you can see, the value area is above here, and last Wednesday's trading session, value area high is here. Pretty low. I did not want to see price even want to go down there. And even if I drew out the volume profile for this overnight session, I'll even do that just for clarity's sake. So let's draw on that overnight profile. So even here, the value area was pretty low. It was at 28.94. So one thing that you want to keep in mind when you don't have volume profile value areas to essentially, levels to look at when you're basing a trade, you can look at other things as well. In this case, as you can see here, this is what we call a high volume node, okay? A lot of volume was being traded here, so you can expect some support and resistance here as well. It's essentially the same as like a POC, if you know what I mean. A lot of volume being traded here. So this level right here, and also keep in mind, as you can see on the right of the screen, it's the 2900 level, a big psychological level. A lot of algos will look at this level, big banks, things like that, okay? So it's a psychological level. Keep that in mind, especially when we don't have volume profiles to base a trade off of, okay? So we have this here, that's one thing to look at, and again, the 2900 level. So at this point, remember, I already took my crude oil trade, so I wasn't really interested in doing anything else with this. So I was mainly just looking at the E-mini S&P. So once we broke down below, broke this low here, kind of consolidated for a bit. And at this point, since we don't have any value areas to base a trade off, again, we're kind of in no man's land here in terms of volume profile, what I wanted to look for was just straight up price action, okay? Basic support and resistance. As you can see here, we have a little support and resistance flip zone, okay? Price consolidated here was resistance, broke above it here on this massive momentum bullish candle here at 1250, okay? This point, we also, not only did we break the support and resistance level here, but we broke back in to Thursday's value area, okay? We broke the value area low here. So at this point, I'm looking for longs. Since we are very choppy and very volatile, the only way I would have entered is if we retested this low, which we did do on the next candle. I will admit this candle is a little scary because we saw some strong rejection on VWAP, and you know, but I was still willing to take the trade just because of the way that price was moving. It was a good bullish signal that we broke the support and resistance zone here. So we broke up. So we retested this value area low, and I entered here. I had my stop below this candle, this big momentum candle. So in this case, it was 5 points, and then I had my target for 10 points. Okay. And again, normally, you know how I always say that once we break, once we saw some strong momentum through a value area low or value area high, we'll test the other extreme. As you can see here, the value area high is pretty far away. And at this point, it's already, 1 o'clock in the afternoon on a Friday. I was not expecting price to go that much further to fill in this value area, essentially, and target that value area high. So I just wanted to get in and out as quickly as possible. I wanted to make sure that I was out of that trade, as we started getting towards the end of the day. So I just took my 2-to-1, which we did hit, and we had quite a bit higher. We almost tapped that high of that gap again. But, it was a great trade. A little risky, or I guess a little scary looking just because the next following candle was a big bearish candle, but we hit our profit, and that's all that matters. So now, game plan for next week. Let's look at this SPX chart again. Again, we're in kind of this no man's land in this gap here, a lot of inefficiency. So there's two things I want to look for. If we're going to be bearish, I want to see a break of this and a hold below it. If we do, we'll see some further downside. On the opposite end, if we can hold above this level here, which is the high of this gap, then we can start looking to fill in a couple of these other gaps that we have on the upside. This little gap that we see here, next short-term target, or even on the downside, if we do close below this, we're probably going to close this gap here, a little bit of a gap. So we'll see where we open. Again, these are the two levels, just essentially this gap here. If we close above it, let's expect some upside. Close below it, we'll expect downside. Let's go back to that daily chart for the mini S&P. Again, we are above the support resistance flip zone, so I'm hoping to see more upside. Hopefully we can break this 10-day. So that is what I'm more leaning towards. So again, let's try and hold above this level here. But all right, guys, so those are our game plans heading into next week. Thanks for joining me again for another daily recap, and I'll see you guys Monday night. Thanks, guys.